Small caps are back, baby. That's right, there's been a ton of developments in the market over the last week or two that has created a wonderful investment opportunity for many of you to take advantage of undervalued small cap stocks. Now I'm going to hop into the reasons why, and hopefully you'll be able to use that for your own investment purposes. Now, I really ask if you appreciate this that you leave a like and please subscribe to the channel, and let's hop right in. Now guys, this is the Magnificent Seven. You'll see here that it's 7 companies: Alphabet, otherwise known as Google, Amazon, Apple, Meta, Facebook, Microsoft, Nvidia, and Tesla. And over the last 2 or 3 years, at least since COVID, these 7 stocks have vastly outperformed the market. They are the new FANG, which was kind of what had run the market prior to COVID, which include Facebook, Apple, Amazon, Netflix, Google. But this is kind of our new troop of companies that lead the market. And over the last years, you can see just how much they have. In this chart down here, you'll notice just how far Nvidia is above the pack. You'll notice Tesla is in there. Tesla, of course, over the last few years has exploded and also kind of imploded in a way. And then Apple, Microsoft, Amazon, Google, like these are companies that are consistently profitable and often heading in an upward trajectory. You'll notice that just in the last 1 year, Nvidia has shot up 210% roughly. Everybody else is a good bit below that. In fact, Tesla year over year is down 19%. But for the most part, these were the safe investments for you if you wanted to make consistent money over the last bit. And if you weren't in these, you were typically missing out on sizable gains. Overall, I've told you about how the S&P 500 is often a great investment. But what's really happened over the last couple of years is these 7 companies have almost pushed the S&P 500 further along than maybe it otherwise would have been. In these charts you see below, you'll see a share of the largest 7 companies by market cap in the S&P 500 is at an all-time high. So these 7 companies right now are 29% of the total market cap of the S&P 500, which is huge. That's a third, around a third of, the S&P 500 is just 7 stocks, which has worked so far because they've done really, really well, right? This is how much higher they've done. So this is in 2023, from December to December, these 7 stocks were up 71%. Compared to the S&P 500, which is up 19 as a whole, and all 493 other companies were only up 6% last year. That's how much they pulled everybody else upward. And even more so, the losers in this scenario have been small cap companies. You'll notice here that global equity valuations, US growth and US large cap are the ones that have really seen positive influence over the last couple of years. Whereas emerging markets have declined, value markets, mid caps too, and especially small caps have been largely undervalued because money has just been pouring into these larger companies. This is a visualization of the S&P 500 over the last year. You'll notice that everything big, all the Magnificent Seven, huge market caps, a third of the S&P 500 is that very bright, profitable green. Whereas some of these smaller companies over here, you're going to start seeing darker greens, meaning that they're, not as profitable. You're going to see these reds, the dark colors, all the small ones really, really struggling. So this is the 1 year performance, but here is what's changed. This is the 1 month performance. Now everything's kind of flip-flopped. You've seen all these big companies that are actually now starting to hurt. Nvidia down 3% over the month. Microsoft, Meta, Amazon, Apple's still doing okay based on that. But look, you're seeing all these down here start to turn green. You're starting to see banks, insurance, asset management, capital markets, deep green. Even over here, real estate, deep green. A lot of these smaller cap companies really starting to come out in the last month. What's even crazier is you look at the week, just how deep red the big ones are, and look where the green is. Once again, small cap companies finally starting to find some footing. And what you're seeing here is institutions basically taking all their money, profits that they've just been building up in all these companies for the last couple of years as they've been really successful, and redistributing to small caps. But what would drive that? Well, there is one huge reason why. I'm going to give you three today, but one huge reason why this started. And that would be interest rates. This was the report that came out in late June 2024 that really kicked off that shift from big companies to small caps. It's the Consumer Price Index, and for the first time since COVID, there was a negative change in inflation. Inflation actually came down for once, slightly. And what that really means is that now there's a 91% chance that the Fed is going to lower interest rates by probably a quarter bip at the September Fed meeting. Furthermore, it's even looking like there's a possible chance that it's going to come down another 25 bips in November, which is further going to decrease interest rates. But why would that matter? Why would interest rates coming down increase small cap valuations? So at the end of the day, small cap companies generally are growth companies. They're still finding their footing, still getting things to work. And the way that they grow is that they take out loans. So what you end up with is companies that are potentially going to be extremely successful having to get loans in order to kind of get over that hump, right? So higher interest rates means that more of their operating cash flow is going to be used to pay interest on these loans rather than using it for further development. Over the last couple of years, interest rates have been up. So we had years and years of interest rates being more normalized between 8 and 3% back and forth, right? Here's the federal funds rate. So you had higher rates. Going into 2008, though, we had the huge Great Recession. They lowered rates down to basically zero and left them there, trying to get the economy going again. By 2016, you'll notice that they start shifting back up. And of course, COVID hit and they had to bring them back down to zero again. And then over from 2022 to 2023, we had that period where they were essentially jacking up rates to try and stop inflation, which at the end of the day killed these small cap companies. Ultimately, that's why we're going to start seeing a lot of these smaller companies finally get some footing, because as interest rates potentially come down and as that optimism returns, the money is going to shift a little. Not that the Magnificent Seven isn't going to continue to be a profitable, good investment, but rather some of these smaller companies have huge growth opportunities. And that's really where a lot of investors get excited. It's like, you want to be that next Amazon. If you could go back in time and invest in Amazon in 2015, wouldn't you? These companies right here are really that opportunity. These are the new Amazons. These are the new Microsofts. These are the new Googles, where you're going to find one of these tiny little boxes and invest in it now, and then it's going to be this big in a couple of years. So that's why you're seeing the money shift. People always want growth. Now, there are investors that are looking for something stable, but most people want to find the next hot thing. Now, the second big thing that's bolstering small caps would be the change in political winds. Now, I'm not going to get political here, but I do want to bring up a couple things that have happened. Now, over the last couple weeks, huge changes have happened. Biden, of course, dropping out of the race, potentially going to be replaced by Vice President Harris. And of course, Trump on the other side, representing the Republican Party. They're going to go back and forth, but each one, the market's going to have kind of a different sentiment. Of course, with Democrats, you're going to see more of a regulatory nature to it, which sometimes benefits larger companies more than it does smaller companies, because they have the free cash flow to kind of withstand the higher regulatory costs that come with that, whereas small companies end up being overburdened. So at the end of the day, sometimes that higher regulation, while it has its positives, can be very negative to small cap companies. So as you've seen Biden drop out of the race, potentially Harris replacing him, Trump, of course, with the assassination attempt, and these other political wins kind of seems to be ahead right now. I think the last time that I saw, actually, let's just look. So right here. Yeah, so right here, you could tell beforehand, Trump was already polling higher than Biden. According to Real Clear Politics. This was kind of beginning into mid-July, and now that he's dropped out, these are new polls. It's a little bit closer, but Donald Trump's still a clear lead, probably very bolstered by the assassination attempt, which of course is going to get his crowd more excited. Now, just as an example for this, I want y'all to know that CEOs think this way. It may not be what you prefer, it may not be something that makes you happy, but the fact of the matter is that oftentimes certain political parties interest different companies. So this is Anthony Noto, he's the CEO of SoFi Bank, one of the very interesting small caps that has potential to grow exponentially over the next couple years. And these were his comments when he was asked about his political opinion about the upcoming election.
What outcome do you think would be best for the economy and for your business in particular?
Well, I'll make an analogy. I went to West Point and I played football, and I want Navy to win 364 days of the year. But on that one day when they play Army, I want Army to win. And so I'd be lying to you and being, less than disingenuous if I didn't say our business would benefit from a Republican administration. There's more capital markets activity. There's more M&A activity. I want our country to be very strong and vibrant. And on one particular day, I'll be rooting for one particular party.
So you just heard it straight out of his mouth, but essentially he knows that with a Republican administration, there's going to be more capital market activity and there's going to be more M&A activity, which is mergers and acquisitions. These all benefit banks specifically. And whenever we were looking at the chart earlier, we saw that banks and financial institutions were some of the small caps that had really popped off in the last month. Generally reacting to the fact that rates will be lower and to the fact that the political winds kind of have shifted towards more of a Republican potential candidacy for president. Now, the last thing that would make small caps finally come back is that they are wildly undervalued right now. So right now I've got a comparison between the S&P 500 or the SPX on this chart and the Russell 1000, the RUT Russell 1000, more being an indication of small cap performance. Whereas the S&P 500, as we talked about earlier, includes Magnificent 7, as well as 493 other very successful companies. So what you'll see is that overall, SPX, the S&P 500 has vastly outperformed these small cap companies. However, you kind of look in the last month, immediately on July 9th, and I think whenever we were looking at the consumer price index, that information came out on July 10th, you see a huge spike. Okay, so all these companies, US companies that have opportunity in the United States, but not yet really able to show that strength, pop off as soon as the interest rate stuff was announced. And I'm going to compare this annual chart to the last month. You notice just how much small caps outperformed the S&P 500 enormously. Like, this is a huge growth opportunity, and they've just started. Once again, you look at the year to date, there's a difference. These are up 17%, like large caps, proven companies, up 17%. Small caps still only up 11%. Within the last month, you've seen a huge growth opportunity, but this is not the top. These have plenty of room to run. They're far behind. You look at even a 5-year, they're just lagging. They've been hurting, like they were neck and neck leading up to rates climbing. Everything was pretty neck and neck. In fact, sometimes you have these small caps actually leading the way. And of course, as rates went up, the divergence started. So I think there's a huge opportunity here as small caps begin to catch up, as money potentially flows out of mega caps and into small caps for growth opportunity. You have a chance to hop in on that action too. I'm going to show you an ETF now that tracks a lot of these small caps. It's called IWM. You may have seen it in the news recently. It's become extremely popular for this exact reason. Now you'll see over the last year, up and up and up, still positive. But like I said, July 10th happens, it shoots up. If you're looking to take advantage of the small cap growth and you maybe don't want the exposure to individual companies, or maybe you just don't feel like researching to figure out what individual companies are potentially the best options, this may be the ETF that you want to use. Once again, IWM. You'll see that the portfolio is mainly made up of industrials, healthcare, financials, information technology, which are the ones that have really popped off recently. Whenever we were looking at that S&P 500 chart, these were a lot of the ones that were deep green. Now, one important thing to know is that the net expense ratio of this, not high, but higher than some of the others, 0.19. If you go to just the typical S&P 500, that's going to be like 0.1. So something to consider when you're investing. But overall, these are like, it holds tons of companies. Just these 10 right here represent only 3% of their portfolio. So overall, it holds a lot of companies. If you're not interested in digging, this would be your option. I do want to stress though that you can never go wrong just investing in an S&P 500 ETF or mutual fund. Even on its bad years, you're usually followed up with 5, 6, 7, 10 positive years. Charts like this are always good to look at whenever you start feeling doom and gloom about the market. There will be bad times. There will be times where you'll lose money, but at the end of the day, if you put money in and you leave it there and you forget about it, there's tons of opportunity for growth. So guys, that's what I wanted to tell you today. I wanted to show you the huge opportunity that you have right now to invest in small caps. I think that they've been undervalued for quite a while, and that both the political environment and the interest rate environment have become quite suitable for growth. And I think that right now is a great opportunity to take advantage of that. So if you agree, let me know in the comments. Is there something else that you think is going to pop off? Are there individual small caps that you think are the next absolute hidden gems in the economy? Let me know down below. I'd love to know. I'd love to research some of them myself. But yeah, if you like this video, please, 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 please like and subscribe. I would really appreciate it. I want to continue to keep bringing this type of information. So I will see y'all next time, and thanks for watching.